You're watching Newsfeed AM. Let's give you the markets update now. The JSE set to open to subdued global markets this morning. This is ahead of the US Fed announcement. Investor focus this week is on the US, where policymakers could signal interest rates that could rise in March, a decision that may influence how the independent or how the markets perform overall. Let's talk to independent analyst now, Jimmy Moyaha, who joins us to dissect the latest moves on the markets. Jimmy, good morning to you. How is the JSE performing in early trade?
Morning, Xoli. Morning to the viewers. The markets opened firmer today. We're seeing miners claw back some of the losses that they had earlier in the week. We're seeing all-round positivity across the JSE. The top 40 is up about 0.5% at this stage. We're seeing some other stocks perform really well. Sibanye is up about 2% as well. We've got Sasol up about 3% as well there. So we're seeing some really renewed optimism around that, while there is some overall global skepticism, particularly following what we've been seeing around the tensions between the Ukraine and Russia, as well as you mentioned, the policy decision that we are awaiting from the US Fed. We did see Asian markets also stabilize and start to trade more steadily today and overnight, off the back of the last 2 or 3 trading sessions of bearish price, just off the back of that global sell-off.
Yeah, let's talk commodities. Oil prices easing in early trade as investors booked profits. This is ahead of an update from the U.S. Federal Reserve, although the fear, though, Jimmy, is that it is over the tighter supply amid the tension in the UK and the Middle East, which has kept the losses. Give us your sense of how this sentiment is affecting the markets.
Certainly, I mean, oil prices we've seen over the last couple of days have been on the up, just off the back of those supply tensions as well. The tensions around the Ukraine and Russia have been weighing in heavily on that, as well as on PGM, the platinum mining sector as well, just because Russia is a contributor on both the oil and the platinum side of things, and because of the sentiments that are being echoed around the position of Russia on the Ukraine border. I mean, President Biden from the US has said that if Russia were to invade the Ukraine, that he would impose personal sanctions on Vladimir Putin. So the increasing escalation of tensions around that has caused a bit of concern around the oil price as well. But we've seen that global demand looks to be returning to normal. We've seen that supply from the Middle East and from the OPEC plus countries has been kept at a steady rate and has been monitored very, very closely by OPEC plus. And I think we will continue to see a increase in oil price. At this stage, I think just the overall sentiment around the US Fed and the decision that they need to make today, or the decision that they're going to convey to us today, will be a big market sentiment driver across the board. We've seen equity markets being affected by this. We're seeing oil markets, we've seen gold markets and other commodity markets also affected by this pending decision. And the outcome of the decision later today or this evening will be a good benchmark on what we can expect in the coming weeks.
Let's talk company news. Steel producer Xoli expecting to end its 3-year profit drought with earnings per share of between R5.80 and R6.10 for the full year to December 2022. Talk us through those numbers.
Yes, so Xoli has been seeing a bit of a tough time over the last 5 years or so. Out of the 5 years, I believe they've only been profitable for one of the years prior to this. So their return to profitability is something shareholders have been very excited to see and have anticipated this for a long time. We saw the share price was up about 16% yesterday. It opened up about 3% today as well. So we are expecting that the news will filter very positively through to the market, particularly for Xoli shareholders. They did also outline that their headline earnings per share would go from a headline loss of about R1.90 last year to about R6 to R6.50 this year. So that is a very positive from their perspective. Xoli also did outline that the demand that they saw steel over the last little bit, particularly during COVID, was down significantly compared to what their demand for steel was in 2018. And so they've just given us comparative figures that if we were to look at the production that they had for 2020 as well, their plant utilization was at about 49%. For 2021, it was sitting at about 80%. So their overall return to profitability and turnaround strategy seems to be working, and the news seems to be very positively received by investors.
Yeah, let's conclude our conversation, Jimmy, with the Reserve Bank, which is scheduled to announce the Monetary Policy Committee's decision tomorrow. Should we be bracing ourselves for an interest rate hike? And if so, how many basis points are we talking?
The general consensus at the moment is that we're likely to see a 25 basis points hike, so 0.25%. And the consensus around that is largely off the back of where the inflation is sitting. Inflation targeting from the Reserve Bank usually sits between 3 and 6%, and the latest inflation numbers have put us on the high end of that band, sitting at about 5.7 to 5.9%. So the general consensus is that there will be a rate hike. It's almost certain that there will be a rate hike. However, we could still see that, depending on what is announced today from the US Fed, that there could potentially be the chance that the Reserve Bank might hold rates steady as they are. Very unlikely that we'll see that, but it is something to be hopeful for. I think going forward as well, we might see future rate hikes going into the rest of the year, particularly off the back of, one, where inflation is sitting, and two, the recent loan that we received from the World Bank. That size stimulus and that size of funds injected into an economy might drive up the inflationary pressure at this stage, and the Reserve Bank could be keeping an eye on that and taking that into account as a factor as well.
Independent markets analyst Jimmy Moyaha, thank you very much for that update. Let's